What's good? What's good? What's good? Today we are going to talk about one of my favorite confluences, which is break of structure. This is probably the easiest confluence you're ever gonna learn, but it's gonna make you a ton load of money. Why? Because it is a continuation method. It is a method that involves the markets giving you motion and then you just react off that. It's such a simple concept, yet a lot of people like to overcomplicate it. So I'm going to make it as simple as possible. But I'm also going to explain to you exactly how to use it because I know so many people use different terminologies or different things. I'm going to keep it so simple so that when you try it out for yourself, you're not going to get confused. And I know some people are going to be like, oh, there's indicators and this and that tells you how to see breaker structure. But listen, when money's involved, we got to make sure we do it ourselves rather than relying on delayed silly indicators. Okay. So let's get right into the charts and talk about the breaker structure. Oh, yeah. By the way, guys, I know you've probably seen on my board right here. What is that? Basically, I was doing a one-on-one coaching student with one of my students, and we would talk about compounding and the importance of compounding. You see, at the beginning, so the blue line is someone who compounds, and the black line is someone who just does things out of momentum and then dies down, does things out of momentum and dies down. The black line is growth, but it's very slow. The blue line is growth, but it's quite fast. At the beginning, you won't realize, right? So doing the little things, let's say, for example, going to the gym, eating healthy, trading, watching my videos, at first, you might not see a big difference, but over time, you're going to see a big separation between someone who watches my bootcamp and watches my videos and actually takes action, than to someone who just watches a video here and there and expects themselves to become great. Okay, so just quickly, because I know I just kept on the board, I forgot to rub it out, but getting sidetracked, let's talk about break of structure and why it's so important and why it's such an amazing confluence. So we all know structure, right? We all know when we're on an uptrend, we have to create higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, right? And then if we're on a downtrend, same thing, lower lows, lower highs, lower lows, lower highs. Okay, very, very simple. However, how do we create higher highs and higher lows? Or specifically higher highs? If we're on an uptrend, how do we create higher highs? Well, if we create higher highs, so let me actually draw this a little bit better. If we create, let's say price is going, if we're creating higher highs, so let's say right now we're creating higher highs, right? So this is the high. If we're creating higher highs, in order for price to create a higher high, similar to liquidity, instead, what's going to happen is we're going to break through this barrier. So instead of manipulating it, we're going to break through this barrier and keep going up. Okay. And most of the time when this happens, we're going to call this a BOS. Okay. Break of structure. That's meant to be a B, by the way. Okay. We're going to call it a break of structure. So if we are creating a higher high, we are essentially breaking this high to create a new high. And then again, same thing, breaking this high to then create a new high. And that's what the market likes to do when it's doing something called continuation. So likewise, if we're on a downtrend, market's going down, it's gone up a little bit, we've created a low, we can draw a line at that low. What we want to see is price to crash and break through this low. It has to break through this low. Boom. This is the breaker structure. And then price can obviously create another lower low. And then break. And then these would be the breaker structure. Now, let me show you on the chart a few examples of breaker structure. But I also need to explain to you one more thing about breaker structure and why it's so important to understand this, because drawing this out is very, very simple, and it's very, very simple to like, oh, if we go up, boom, price goes up, okay, that means we're going to expect prices to continue to go up, so therefore we should just buy. It's not as simple as that, okay? Because when we have quote unquote break or structure, that could be a manipulation in the markets, a liquidity sweep, what we spoke about yesterday. Now, how do we differentiate breaker structure and liquidity sweep? I'm going to explain to you in a second. But before, I want to show you in the charts this breaker structure actually happening. Okay. So, for example, here you see price is going in an upwards motion. Okay. Price is going up. Now, in order for price to go up, we have to identify some highs. Okay. So we got a high right here, 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 and then obviously a high right here. Okay. What I'm going to do is I'm going to draw a line on all of these highs. So we can actually break down all of these highs. So 1, 2, oh, we actually have a high right here, but it's fine. 3, 4, 5, 6, 7. Okay. And technically, slow. Technically, we don't need this high. Okay. Let me just remove this. Okay. So, and technically, we don't need this high as well. Okay. So, as you can see, price has a high right here. Boom. Comes down. Comes up. Boom. This is a breaker structure. Okay. Very, very valid. This is the first breaker structure. Market was going down. It reverses. And now it's going up. Breaker structure. What happens? We then create a new high. Once we create a new high, what do we do next? We want to see how price reacts again to these highs. Price comes to this level. Okay, we didn't really get to have a breaker structure. Okay, I'll explain to you why in a bit. Just hold on for a second. This is not a breaker structure. I'm going to remove this high. Okay, this is not a breaker structure. The breaker structure ends up occurring over here at these highs. Okay. Now, why did I remove this high? Is because look at when we draw out breaker structures. Okay. When we draw our breaker structures, we need to make sure the first point of contact from that high. So the first point of contact from that high is a body closure. So let me give you an example. I'm so happy gold loves to give me the examples. So let's say this is a high right here. Okay. And now price is deciding to go up. Okay. What I want to see is the first point of contact. I want to see the first point of contact being like this, where the body is over that line, that high that we created. Okay. If it is like this is not a line. This is not a body. The first point of contact is a wick. And so this could be a liquidity sweep. And this could be a reaction, because that means price didn't want to go above here to create new highs. This could be a reason for price to go down. So that's why it's super important to understand the difference between a breaker structure and liquidity sweep, because they're both exactly the same. The only difference is liquidity sweep looks like this, and a breaker structure looks like this. That's the key difference. Because if we see the price, okay, the first point of contact is a wick. Let's say, for example, this wick was a bit higher. This line wouldn't be the breaker structure. Would have to now draw a new high, which would most likely be this high, and then this would be the breaker structure. This high right here. So it's very important to understand it has to always be the first point of contact. If the first point of contact is not a body closure, that high is invalidated, and we now need to locate a new respected high, or a new high that the market has created, and see what price does from that new high. And if price decides to just range or not do anything, so let me show you, for example, here. First point of contact was a wick, and then price decides to go crazy mode. But then we look at the most recent high. Technically, it's not even this. The most recent high, or the most respected recent high, would be this high right here. And so this high would then be the cause of this breaker structure, which would then trigger me to look for entries. And then as you can see, price just end up going up. But during that process, you can see that price had a high, but guess what? Price comes down, tries to sweep out some liquidity out here, but doesn't. But then guess what happens? Price sweeps out this liquidity with this kind of stick, and then again, these lows, again, just sweeps out. So it's like so many buy orders or stop losses were in this area, and that's why price was in this little range right here. We don't want to be trading in this little range, okay? If price is ranging, you don't want to trade. Always locate a breaker structure. That's why we use this as a confluence, because when there's a breaker structure, it means it's coming out of a little range. If you see a range, just don't trade it. So let me show you more examples. Again, price here. Let me delete this so it just cleans up the chart a little bit. Okay, over here, you can see that price created a high over here. Okay, price created a high over here, but look at the first point of contact. The first point of contact is a wick, so we have to delete this high because this high it's not validated, and then we need to locate another high. Now, price actually created another high with that same wick, which is great. And look what happens. First point of contact is a body. That's the breaker structure. That's where price is going to go, and that's why price continues to push up. We're on a daily time frame. So let's actually scale in to the 5 minutes. Let me show you more examples of breaker structure. Okay, because on the daily you're not really see that many, but on the 5 minutes you're going to see a lot. Okay, and I like to locate breaker structures on the 5 minutes. So I see liquidity on the 1 hour, and as soon as I get that sweep of liquidity, the concepts I showed you yesterday, as soon as I get that, I then scale in to the 5 minutes and I locate breaker structure. That's the next step. I'll write that down for you. So step one. Locate liquidity sweeps. Step 2. Scale to the 5 time frame and locate break or structure. Okay, this one on the 1 hour time frame. This is how we kind of build it together. And don't worry, later on in this bootcamp series, we are going to explain the step-to-step guide on actually looking for entries. But for now, I need you to become a master at breaker structure. Okay, so that's step number 2. Right here. So if we're on a 5-minute time frame, we need to locate breaker structures. Let's look at this leg, for example, okay? Let's actually locate valid breaker structures, okay? Valid break of structures. So let's draw out all the highs, because we're on an uptrend. I want to draw out all the highs. We don't need to draw out lows, because lows will then mean we're breaking lows, meaning that the market is going down. For on an uptrend, we want to mark up the highs. On a downtrend, we want to mark up the lows. So I'm going to mark up all the highs. So we've got one high right here, second high right here. Now, we have a bunch of highs internally. However, this is the OG. This is the OG high that's going to cause us a good move, okay? Not these highs. These highs, so for example, like this high right here, this high, they're not really as strong, okay? I mean, technically, yeah, this high is the reason why price pushed up, but this confirms it because this is a significant high. So if I go into like the 15-minute time frame, you'll notice, or the 30-minute time frame, you notice that this high was significant. These are just internal candlesticks. That's why it's very important to draw out the highs, okay? So we're just going to get rid of this. And we got another high right here. Then here. That is telling us a story, okay? And I'm going to explain to you. This high right here, is it a breaker structure or is it a liquidity sweep? It is a breaker structure, okay? Why is it a breaker structure? Because the first point of contact is a body, therefore, and it's pushing through. It's like imagine you are punching through a wall and your hand just instead of bouncing off that wall, it just goes right through that wall, right? That itself means that that wall is demolished. That wall is gone, right? We push through that, we've gone through that wall's gone, that wall's demolished. That is a breaker structure. Second high, boom, here. First point of contact. As you can see, we attempted to try and hit these highs. It never worked. This candlestick finally hits that. What story does it tell us? It tells us that this is a breaker structure. Cool. Next one. First point of contact. Is that a breaker structure? No. That's a wick. So this high, it's not valid. Boom. Next high. Is that a breaker structure? Well, first point of contact is a wick. No, that's not valid. Get out of here. Next one. Is this a valid breaker structure? No. Get out of here. So you see, the ones that we've projected are the significant highs. 1, 2, and 3. We haven't really broken above that yet. Okay? So those are the highs that are significant. Those are the levels where breaker structure occurred, where most orders are taking place. Okay? Now, if you notice, price likes to come back to those levels. Boom. Okay? Price will break and then come back to those levels. That's called market structure, friends. Okay? That's the power. Now, we're going to talk about fair value gaps later on in another video. But breaker structure, you start to notice, hold on a minute, the valid breaker structures, price likes to come right back to it, gravitates towards it. So if I had to predict, even though I don't like saying the word predict, but if I had to kind of like show a forecast of what I think could happen, we could project, okay, price will go up, come back down to this level, and then continue to go up. That's what we could be expecting. But we can't expect that unless we get that breaker structure. If we do get a breaker structure, then we're good. If we don't, then it could start coming down. It could start crashing. And then if it crashes, we can use liquidity levels, right? Let me just draw this out. We could use liquidity levels like these lows, and we could just see, okay, does it break through to create a breaker structure? Yes, amazing. Does it break through, create a breaker structure? Yes, amazing. And so now, see how liquidity ties in to this? Okay, let me actually show you another thing why these are also significant highs. If you go onto like a higher time frame, I'll go into like the 15 minutes. You can see. Okay, yeah. If we go to like a higher time frame, so from the 5-minute went to the 15 minutes, you'll see those are the significant highs. 1, 2, and obviously this one. These are all fake highs. Okay, these fake highs. Why are they fake highs? Because these were probably where orders were taking place. Why did orders get taken place? Because look what happens here. Look what's over here. Stacked up liquidity. We have stacked up liquidity. That's why price is giving out fake highs. This could mean there's a lot of sell orders right here. A lot of sell orders. That's why the market's trying to push down now. Meaning that this little push to the upside could potentially cause a market to go down. Obviously, it might not happen unless we get a bearish breaker structure. But currently, right now, we're in uptrend because we're getting a bullish breaker structure. Okay. So if we get higher highs and higher lows, we're in uptrend. And if we're getting higher highs, that means we're getting a breaker structure. If we're getting lower lows and lower highs and we're breaking lower lows, we continue making lower lows, that means we're having a bearish breaker structure, meaning that we're bearish. Okay? So for your task today, I want you to go onto the charts and I want you to show me 5 valid fair value gaps. 5 valid fair value gaps. I don't want you, sorry, not fair value gaps. See, I'm not even thinking right. 5 valid breaker structures, okay? I want you to think about, show me, or I want you to find on the charts, pick a pair, and locate 5 valid breaker structures. So exactly what we did today. I want you to locate 5 valid breaker structures. And I want you to explain why they're valid. What was the reason why it was valid? If you can explain that, you're good. And the more you practice, the more you locate that, you will start to notice these very, very fast without an indicator, without, messing around with silly little indicators and trying to figure out, and you won't make silly mistakes. Okay, I've seen so many people draw up breaker structures and I look at it, I'm like, that ain't a breaker structure, my friend. That is wrong. And that's probably why you're doing the system incorrectly. That's probably why you're losing trades. Okay. I don't want to hear, oh, but Moby, the system doesn't work, and I see your charts, and it's because you haven't drawn breaker structures correctly. It's such a simple concept. It's not that hard. So make sure you draw out the breaker structures correctly and make sure that you are actually validating these breaker structures and you're actually checking if they actually make sense. But that's it for today. If you want to, make sure you like this video. Make sure you comment down below what you've learned today so it helps others as well. Maybe summarize the videos to help others. And make sure you do the tasks. If you don't do the tasks, you're going to be on that bottom. Let me actually put the camera back on me. If you don't do the tasks, you're going to be this guy right here, the black line. I want you to be the blue line, okay? See how it all ties in. But I'm going to see you tomorrow, guys, in a bit.